Hey everybody, Brian Shannon here from Alphatrends.net. Today's Friday, the 26th of April. You can see here I've remembered to swing my microphone over, so you should be able to hear me loud and clear. We had a good week in the markets. Equities are up across the board. Only the bonds were down, as well as Bitcoin, and Ethereum was actually up a little bit. Wrong color on that, but big move in the semiconductors. Let's take a look. I accidentally didn't swing the microphone over, so I already recorded this. That's why there's lines on here. Let's take a look, objective look at the markets. We've seen a beautiful rally this past week. Although, when I say beautiful, in terms of percentage move, Thursday was really a day, though, that trapped a lot of people. I think got a lot of people bearish, or, maybe you bought that dip. Buy strength after the dip, which means shrink it down to a shorter term time frame and look for evidence that the buyers are back in control. It can be as easy as just buying as it's back above the daily volume weighted average price like we saw on yesterday's gap lower. We're not here to talk about day trade scenarios, instead to look at the macro trends of these bigger ETFs. Now the S&P is right up against that blue 50-day moving average. It's right up against the declining 20-day moving average. It's up against this prior little band of support. So this is the anchored VWAP off of the all-time high. I'd love to see it pull back a little bit, maybe come down and test this 5-day moving average. That would be a nice thing to do, and then see if it can rebuild some more strength. We saw a lot of earnings reports this week with positive results, so that really helps with the backdrop overall to think that we're not going to experience a larger breakdown. We survived a test of the year-to-date anchored VWAP, and that's where we have buyers back in control. Now, the Nasdaq is a little bit trickier because we're below the declining 20-day moving average. That's that red line in there, the thin red line. The declining 50-day moving average, that blue line. And while we did get back above the year-to-date anchor today, we are still below this prior band of support. And this is that band of support in here that, really held the market up. It was once that broke that the stocks really fell apart. And I would expect to see some supply released in here maybe early next week, and then perhaps we can digest that gain and make a push higher. By the way, I am running a sale at alphatrends.net, and that sale ends on Sunday. I'm not going to talk about it a lot here, but you get a lot for $999. That's the all-in price. You get 2 courses, which are about 18 hours of recorded videos with different technical analysis approaches, including the anchored VWAP. You also get 3 daily videos, the end-of-day video that's just like this, the ETFs, and that's generally about 5 minutes. I give key levels, sometimes some trade ideas on the ETFs, and then there is a trade ideas video, which is individual stocks. It's highly educational. We look at stocks on 2 to 6 different time frames, laying out risk reward, and risk management truly is job number 1. That's what the focus of that is, and I go through those until the trades are closed. That is, we talk about the entries and then managing the stops. So we do that with a midday video each day, which runs about 5 minutes. You also get a 30-minute one-on-one with me. That a lot of people love that part, and I get to learn more about how I can help you. So to me, that's an important function of the Alphatrends subscription. And we do webinars every other Monday, and there's a Discord room as well. I mean, there's a lot of opportunity for learning and for a positive environment. So let's go back to talking about the market now that my sales pitch is over. Hopefully you take advantage of that. If not, maybe sometime in the future. The Russell 2000 continues to be the overall laggard. It's still below this year-to-date anchored volume-weighted average price. That's that thick, pink fuchsia line. It's below that red declining 20-day moving average, below the 50-day moving average, below the year-to-date high anchor as well. I'm thinking maybe it can do this, but still, even if it does, it's likely to find some supply in this area. So just really, I'm not interested in the Russell 2000. Semiconductors, as we said, they saw a 9% move this week, a beautiful A to B, B to C, and C to D measured move right up into the year-to-date high anchor. So right here, that's the anchor off the year-to-date high. So maybe we see a little bit of follow-through on the upside, but we had prior support in this area. It could bring some resistance in there, and then maybe a pullback like I outlined over here on the daily time frame. Maybe a pullback, rally up another higher low, and then perhaps these semis can get going once again. There's a lot of macro cross currents. I always focus on individual stocks, each move on its own. The biotechs, I'm long a little bit of this. It's not a trend trade, obviously. We've had this huge down move. Let's just erase that. But we've had this huge down move in the biotechs right to the 200-day moving average. We cut that underneath it briefly, saw a rally, and then we undercut it ever so briefly here this week. And what happens in there is, people who thought that was the low, they set their stop below it. Well, now they're out, and they're going to either scramble to get back in, or they're going to, buy much higher later emotionally. I don't really, whatever they do is on them. But it also brings in uneducated short sellers who think, hey, it's breaking down again. I think you ought to keep an anchor off of this low and see how the market responds to it. If we see, for instance, the biotechs rally up towards this anchor from the low, and I guess my head's in the way there, so let's move that up here. Then that could provide some pullback opportunities to buy after a pullback, buy strength right in here. And then you've got the financial stocks, which continue to hold up really well. They found some supply right up here at their prior band of support. And that 20-day moving average needs about a week or week and a half to start to flatten out. So maybe we're going to start to see a little bit more of a time correction for these. That would really be the better move than something like this. To see, a lower low, and then come back up, take some time and then build and move higher. Then stops could go underneath these levels. So I think you stay away from there. We're going to talk about Bitcoin and Ethereum in a moment. But I don't see any real advantage to getting involved in those right away. The energy names had some earnings today, so they broke down on the open, but still holding above this key level of 94.5. So if you trade the energy names, I think they probably need some time to digest a little bit, then perhaps continue to move higher. As we know on that weekly time frame, we've got a great breakout here that has been tested. So that's something to keep an eye on. And let's take a look at the cryptos, because we're not really thrilled about the action in here. Right now, this is, so as this table says, this is the year-to-date anchored volume weighted average price. This is the anchored VWAP off of the the high of the year, which is the all-time high. And the green is off of this year's low, which happened to be the handoff from this level as well that we've previously discussed. We're below a declining 20-day moving average. That's that blue line. We're below declining 50-day moving average, that green line. So to me, there's no hurry to get involved in Bitcoin. To the way that I would like to see Bitcoin move would be, maybe it comes down to this anchor from the year-to-date low, and then a breakdown of the year-to-date anchor would be really nice. That's what I'm looking for. I don't have a position in Bitcoin right now, so I'm hoping that happens. I'm not hoping for you to lose your money if you're long, but right now, with a declining 20-day moving average, declining 50-day moving average, it says money's coming out of this market. There's no reason to be an aggressive long right now. Ethereum holds up a little bit better, and as I've mentioned, I have a very small piece in here. It's probably about 8% of my crypto account, and that's all the crypto exposure I have. But the same thing here. We've got a declining 20-day moving average. We've got a declining 50-day moving average. We've got the anchor from the year-to-date high up in here. I put an anchor right here off of this peak as well. That's where we found supply along with the 20-day moving average this week. Now, a little bit more bullish is that it's holding the year-to-date anchor, but I'd like to see that fail, come down and test this trend line as well as the anchored VWAP from the late 2023 low. Solana, same type of thing. I'd love to see maybe a bounce here off the year-to-date anchor, and then a really nice drop down to the anchor off of the break from this move, down near 100. And that would complete really a measured move, A to B, B to C, C to D. So I don't think there's any hurry to be involved in the cryptos. Sorry for those crypto bulls that think they can do nothing but go higher, but looks like we're in a little bit of period of some profit taking. So thanks for tuning in. Hope you had a good week, and hopefully I'll see you as an Alphatrends subscriber. We have our what will be newer subscribers, their first webinar Monday night.